Okay, let's try this. Okay, guys, can you hear me now? Testing, 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 testing. Can you hear me? Ah, fantastic. We have sound. Ah, brilliant. Okay, fantastic. Okay, am I live? Can the audience hear me as well? Yep, I think I'm live. Can you, administrator, could you pass me the chat box, please? Yeah, brilliant. Okay, fantastic. I've got the chat box. Okay, and so everyone can hear me now. Yeah, I'm live. Okay, that's brilliant. I apologize for that, guys. I've purchased a new headset and I've been using it all week without any issues. So I'm not quite sure what's happened there. Maybe the headset doesn't work with this Google Hangout system that we're using. I'll do a little test with administrator afterwards to see if I can get this working, but I'm on the old headset. So yeah, let's just get on with this. Thank you very much. Sorry for that, guys. Sorry. Thank you for your patience. My name is Zaheer Anwari. I am a senior member of the Dynamic Trader community. I am a long-term trend trader. So in this presentation, I talk about analysis from a long-term perspective. So looking at the monthly, the weekly, and the daily time frame. Before I actually you can't see my e-signal either. What's happening here? Okay, there we go. Before I get into the actual analysis, I just would like to direct you guys to the apprentice training. So this website here, go.thedynamictrader.com/apprentice training. I'm going to put that in the chat box. This is to if you guys want more training beyond the apprentice, beyond this presentation that I do with FX Street, if you want more training on trend trading, then this is the presentation. This is the website to go to. Okay, it is £99 plus VAT for a month. If you're not in the UK or in the EU, then you don't need to pay the VAT. But it's £99 for a month of training. It includes software. It includes community support, weekly webinars, a video portal. There's a whole lot of goodies that goes into this, okay, including a strategy, live training, risk management, compounding, all fully explained within a month of training, okay? So if you want to know more about this, please visit the website that I've just sent over. Okay, let's go to the to my charting package. So if you bear with me 1 second, I'm just going to switch to e-signal. When you guys can see e-signal, can you let me know? Administrator, can you see my charting package, please? Yeah, fantastic, brilliant. Okay, so what you can see in front of you guys is a typical chart setup of mine. So you have the Aussie dollar, US dollar at the top in terms of the watch list on the left-hand side, and this goes all the way down to the South African rand, Japanese yen at the bottom. So it's a very extensive watch list. You know, this kind of watch list normally, you know, kind of makes people nervous because I'm looking at so many currencies. But the question is, how do I look at such a big watch list? And the answer is preparation. A, preparation, and B, understanding. I spend an hour at the weekend looking at currencies. Spend an hour at the weekend going through each currency and looking for the best setups. This takes me no more than half an hour to an hour. This includes foreign exchange, stocks, commodities. By doing that analysis, I then know exactly which 2 or 3 currencies I'm looking at Monday to Friday, or which 2 or 3 stocks I'm keeping an eye out on. One thing that people notice as they start getting familiar with trend trading is that currencies move in groups. Not all currencies will be in trend. In fact, most of these currencies will probably be in an area of consolidation. What we really want to be looking at are the 2 or 3 currencies with the best opportunities. And money ultimately moves between groups. So for example, you could see all the pound currencies in trend, then they go quiet, then all the euro currencies go into trend, then they go quiet, the yen currencies go into trend, then they go quiet. You know, currencies move in groups. So once you know that, let's say, for example, if all the yen currencies are in trend, there's only about 8 or 10 yen currencies on here that I need to look at. All the others are in consolidation. So it's really about that preparation that I do at the weekend that then allows me to narrow, if you like, my screen time down to about 10 to 15 minutes a day, Monday to Friday. Okay, and that includes putting entries in, stops, exits, compounds, whatever I need to do. That all takes 10 to 15 minutes Monday to Friday. Now, also what you'll notice, I look at the bigger picture. Monthly chart, top left, top charts rather is the monthly, bottom left is the weekly, bottom right is the daily. The monthly has the major levels of support and resistance. This is a proprietary tool that we have that automatically highlights the levels of support and resistance based on an algorithm on major pivot levels. And then we've also got the annual levels. That's the high, the low, and the closing price of 2015. These are also very significant as areas of support and resistance. On the weekly and the daily time frame, I have two sets of moving averages. So the black line is the 200 moving average on both the weekly and the daily, and the blue line is the 50 moving average. The black line gives me the long-term trend. The blue line gives me the medium to short, the short to medium-term trend. What I'm really looking for is alignment between both time frames. So in a strong bullish market, I want to see price trading above both the 200 and the 50 on the weekly and the daily. That's a strong bullish market. In a strong bearish market, I want to see price trading below both the 200 and the 50 on both the time frames. Okay, so we really need to see alignment. Now, this logic is not new logic. The logic of the 200 moving average, for example, that came around before the internet. Traders used to draw charts by hand, and so because traders used to draw charts by hand, they were very selective with the information that they put on their charts. The 200 moving average was proven to be a good indicator of the long-term trend. Okay, so in trading, you don't need to reinvent the wheel. Since the creation of the internet, private traders have, in a way, almost lost their way a little bit, because there's so much information out there on how to trade, and most of that information is based on shorter term trading. That is the route that most private traders go down. It's not necessarily the best way forward. The best way forward for private traders is to look at the bigger picture and for longer term trading. There are a host of benefits. First of all, most private traders are in a job of some sort, 9 to 5 or something. So you need a style of trading that can be adapted around that. You don't want to be glued to your broker app and then having a 9 to 5. You've got two jobs side by side. You don't want that. Secondly, by looking at the larger time frame, it's less screen time. What's happening intraday, hour to hour, is of no concern. So you eliminate all of that intraday noise. Thirdly, the profits tend to be larger and more consistent. People don't really grasp this concept because there's that understanding that the more you trade, the more money you make. When in fact, in trading is the opposite way around. The less you trade, the more money you make, because you just want to take a few trades and you want to hold on to these positions and you want them to grow. In addition to that, as those positions start returning your profit, you want to start compounding into those positions. You never want to set targets, so you don't work on a 1-to-1 ratio or a 1-to-2 ratio. You want to work on a 1-to-infinity ratio. Cap your losses, let your profits run. Remember the philosophy of the trend is your friend. So a trend can remain in play for months at a time. So you want to keep on compounding and taking the trend for everything that it has when those trends appear. Okay, so if we look at the Aussie dollar, US dollar, we can see that from 2011, at the round number 1.10, we've had weakness to the downside, and then at around 0.70, price found the support level, and we're now seeing a bounce to the upside. Pretty strong momentum to the upside. This is the issues. This is really where patience comes in. If we take price action to before March, we can see that price was in an area of consolidation. This is where you really want to be standing aside. You don't want to be trading in consolidation. Of course, it's tempting to draw resistance and draw support and go short of resistance and long of support. Is a very simplistic approach, but it's not a consistent approach. In fact, it's a very difficult approach. And in addition to that, it's an approach that can, where you can incur losses and even large losses, because trades tend to be short. And if trades tend to be short, traders then tend to start risking large on small moves. So you really want to be standing aside from a consolidation. What we're playing on is probabilities. As the long-term trend is bearish, we favor a breakout to the downside. That's what we favor. However, the market does what it does, and we can now see momentum to the upside. So we need to be patient, and we need to look for an entry point into this if price continues to the upside. On the weekly time frame, you can see that price is trading below the 200 but above the 50. Not the best scenario, but this doesn't necessarily mean we don't trade it. It just means that we have to reduce our risk. Remember, trading's about finding the best environments. If you're in an environment that meets all of your checklist, you can risk full allocation, 2%, 3%, whatever it is. If you are in partial, if a chart is set up to meet most of your checklist, but maybe one or two elements are missing, then you may still take the trade, but you reduce your risk accordingly. So we're below the 200, but we're above the 50. This doesn't necessarily mean that I'm not going to take the trade. Why is that? Because on the daily chart, we're above the 200 and we're above the 50. So both of these are acting as support. Now, this is still too early to take the trade. Why? Because we've got a support level right here and right here. There's the whole support zone. Based on the low of this consolidation, we've got a whole support zone here. If price clears this support zone, then we could start seeing momentum to the upside. That is when potentially we could start looking for opportunities. However, we've got resistance here, we've got resistance here, resistance here, resistance here, and we've got the round number 0.80. So if you do start looking for long opportunities, be aware of the resistance levels that lie ahead. This doesn't look like it's going to be the easiest of charts to trade. Remember, the history of the chart paints a very good picture of what could happen in the future. Just because it's moving quite quickly now doesn't necessarily mean that's what's going to happen moving forward. We do need to see price actually prove that the trend has changed, and that's by seeing price continue and create new highs in terms of this particular run, and then look for an entry point. So don't be in a rush to get into this. If you haven't read the book, I forgot what it's called now. It's Operations of a Stock Trader, Jesse Livermore. If you haven't read that book, then please read that book, because he talks about how only when he started applying patience to his trading did he start actually making the money that people want. I'm talking about the 6-7 figure account sizes that people want, is by applying patience. At the start of a bull run, you'll see lots of bulls there, but they've got in too early. At the start of a bear run, you see lots of bears there, but they've got in too early. If you get in too early, there's a very good chance you're going to get bitten. So you really want to apply patience and let a trend establish itself. Okay, but Aussie dollar, US dollar, it is starting to look interesting, but be a little bit patient for now. Let's move on. Let's go to the euro dollar, just because everyone's kind of fascinated with the euro dollar. So let's have a look at what the euro dollar is doing. We'll start with a monthly time frame. Trend is bearish. We can see that there was a big fall in price from 1.4 to 1.1. This is the last time I traded this. As a trend trader, this is what I'm looking for. Very profitable. Now, if you look at the history of the chart, there's trends everywhere. Trend, 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 trend there. So you can see that the euro dollar does trend well. And that's where you want to be. You want to be on those long-term trends. At the moment, price is just going through consolidation. And you guys should very clearly see that. Here is a trend. Here is a consolidation. There is no movement in a particular direction. What you'll deal with here is intraday volatility. What I'm looking at as a trend trader is directional momentum. I'm looking for volatility in a direction, not just random volatility that you get intraday. I'm looking for volatility in a particular direction. As the trend is bearish, I favor a breakout to the downside. Of course, we could see momentum continue to the upside. We're seeing a bit of bullish strength in March. This could continue. But as the trend is bearish, long term, I favor a breakout to the downside and momentum in the bearish direction. On the weekly time frame, price trading below the 200 and below the 50. But if we look at the weekly time frame, you can see that price is just going sideways. In addition to this, guys, look at what the moving average is doing. Another good indicator when it comes to moving averages is whether the price is in a trend or in a consolidation. If price is in a bull trend, we expect the moving averages to hook up. So if you look at this 50 moving average here, it's hooking up. Then when the trend starts reversing, the 50 moving average starts heading down. So the clock angle is very important. It gives you a good indication of what is happening. Look at what is happening now on the 50 moving average. Very, very flat. Totally flat, in fact. There's no angle on it. So that's a good indication that we're in the range. And look at what price is doing anyway. It's very clearly going sideways. And if you look on the daily chart, again, if you look at the moving averages, look how flat the moving averages have come. There's the 200, totally flattened out. 50 has flattened out. If you look at price, it's going sideways anyway. So remember, we need to break down trading into price action as your main indicator. support and resistance as your leading indicators, and then moving averages as your lagging indicator. That's ultimately how I do it. So price tells me initially what is happening, and we can see straight away that price is in a consolidation. I then look at the moving averages to confirm that, and the moving averages are flat, confirming that we are in a consolidation. What I'm now waiting for is a breakout. If price breaks out, and my bias is with a breakout of support, if price breaks out to the downside, I then want to see price move towards the next level of support or resistance, and that is on the monthly time frame. So if price clears this level here, I would then like to see price move to once it clears this support level here and this whole area here, I would then like to see price move to the next support level, which is here. If it clears this, I want it to move to the next support level here. Okay, so that's how, ultimately, that's how I look at trading. I keep it very simple. I look at the bigger picture. I don't clutter my charts with Fibonacci's and trend lines, etc., etc. They had their place in time. There's no subchart indicators there, RSI, stochastic. Those kind of techniques had their place. But as private traders now, we're far more sophisticated. We have far better knowledge in terms of what works, and price action and a few good indicators are where you want to be. Okay, let me just go to the chat box. FX praise, I use simple moving averages. So I don't generally like to complicate my trading. If I open up the weekly and the daily time frame, so if I just go into the back end, you can see there's a 200 moving average, simple price source close, and there's the 50 moving average, simple price source close. Now the thing to note is this: look at where the simple moving average is, and let me change it to exponential. What difference does it make? There's exponential, there's simple. Exponential, simple. There's not much difference at all. So I know exponential is more weighted to current price action, but overall, it doesn't give you an edge. Moving averages won't give you an edge, so it doesn't make a difference whether it's simple or exponential. What will give you an edge is putting everything together. A, we've looked at larger time frames. B, we've looked at support and resistance. D, we've looked at price action. Is price in a range or a consolidation? E, we've looked at moving averages to tell us whether we're in a trend or a consolidation. F, the watch list, extensive watch list, and making sure I'm looking at the best opportunities. You've got to put all of these pieces of the puzzle together, guys. It's not as simple as just opening a broker account and going onto the internet, downloading a bit of free software, and finding a free strategy, being part of free forums, sharing that kind of information, and then thinking it's going to be consistent. It's not. You have to look at the facts. The facts suggest, very real facts, only 5% are successful in trading. You have to look at that. So what that means, you have to look at what the 95% are doing and do the opposite. It really is that simple. Okay, right, let's move on to the next currency. So that was the euro dollar. Let's have a look at the euro pound. Now, euro pound, if you look, we were in a long-term bearish trend. So from around this pivot pivot high of 2013, we had like a 1, 2, 3 chart pattern. We had an engulfing candlestick here, bearish engulfing, and since then price went into this very good bearish trend. We then found support. Look at where we found support, 0.70 round number, messy consolidation, and now momentum to the upside. Okay, so this is December, January, February, March. And now if you are questioning whether pink lines are relevant, when I say the pink lines, what I mean is if you're still unsure about if the high, the low, and the closing price of last year act as a level of support or resistance, you can see very clearly that in February, price tried to break through the high of 2015. Price reversed back down, so the bears came in, pushed price back down, and now we're seeing weakness in March. Okay, so you can see very clearly how price reacts to these levels. They're significant levels. On the weekly, you can see that price is finding resistance at the weekly 200. There you go. Trend is bullish, but currently finding resistance. And you can see that price is, well, the 50 moving average is starting to hook up, so that's looking good, telling us we're in a bullish trend. But until price clears through the weekly 200, this is not a trade that you want to take. Daily is looking good. Look at the 50, really heading up, suggesting we're in a trend. 200 is starting to hook up as well. So good alignments on the daily chart. However, we've got round number 0.80 right there, and we've got the high of 2015 right there. So until price clears this resistance area, you don't want to be taking trades. And you can see that price has reacted to that with weakness. Okay, so what we're looking for now is price to hold at a certain level and then continue to the upside. All right. So let's move on. Let's go to the euro yen. Okay, euro yen. Now you can see that price is in a long-term bearish trend. Price is trading below the low of 2015, so we're in a bearish market. But we've got the 120 round number acting as support. So price is really stuck between this level of resistance, this level here acting as support, which is the high, the pivot high of 2011. So you can see that price is stuck between resistance and support, and 120 acting as another support level here. So we really need to see these two levels cleared, and then we can look to trade this ideally towards 100 and then this support level here, which is the low of 2012. If you look at the actual trend structure, look how well it's trended. A very, very neat trend to the upside. That's what we want to see repeats itself. And remember, that's what technical analysis is about. Technical analysis is about looking at the history of the chart and then looking for those patterns to repeat. That's why support and resistance are fundamental to my approach. Good support and resistance levels are fundamental to my approach, because once a certain level of support, i.e. 120, is cleared, I can then know exactly where the next levels are. And I simply then need to hold my positions till those levels. Okay, remember, like, these are monthly charts. These bars are monthly. So within 1 month, it's covering a good 400, 500, 600 pips in a month. On the weekly, trading below the weekly 50 and the weekly 200, trading below the daily 200 and the daily 50. So we can see that we're trading below both moving averages. The weekly and the daily time frame are looking good in terms of alignment, but it's still too early to trade, because you can see how price is reacting on the daily. You see how it's reacting to support. Okay, it's support level right there. It's reacting to that support level, and you've got the 120 as well. So we need to see price clear out of this support zone. So again, standing aside, this is a common feature of the market right now. Now, I know, remember, this is from a long-term trend trading perspective. Day traders will have a different approach. Okay, but ultimately, trading is about making money consistently, safely, and large compounded returns. That's why people turn to trading. You don't turn to trading just to make a bit of, I mean, that's not entirely correct. I speak to people and they're like, oh, I don't want to be greedy. I just want £100 a week or £1,000 a week. You know, they have a fixed idea in their head of the kind of money they want. You know, what you guys need to remember is that foreign exchange is a $5 trillion market. So why would you limit yourself to £100 in a $5 trillion market? At the same time, if you want to start extracting those large sums of money, then you need to align with yourself with how the markets work. It's really important. In today's day and age, most traders are very heavily results driven. There are not many traders out there who are process driven. They're so focused on the money that the process of getting that money comes a second place. But how are you going to get that money if you don't really know the process? Yeah, so you know, traders should really focus more on the process as opposed to the results. And one thing that you will then learn is that results will take care of themselves. Money always takes care of itself, but without the understanding, you won't make that money. Become process driven, not results driven. Okay, let's move on. Pound dollar. If you look at the pound dollar, this was the last time I traded the pound dollar. So you can see there was weakness from 1.7 to 1.5, a bearish trend. This was the last time that I got into this particular currency. Since then, it's been quite tricky to trade. Got stopped out on the pullback. Price gone through consolidation. Another leg to the downside. Look, it found resistance at 1.6, went through the 1.5 support level, and it's now bouncing at 1.4. So again, if there's any question that price reacts to round numbers, then this should really be answering your questions. There is resistance and there is support. Price bouncing at 1.4. If it clears, as a trend is bearish, I favor a continuation to the downside. Now, again, if you don't really understand that concept, let's move price action to here. Price came to 1.5, which is a round number. We expect a bounce at 1.5, which it did. However, a lot of traders will then be looking for this trend to continue to the upside. Look at what the next bar did. Yeah, a further move to the downside. So don't anticipate a bounce just based on a single event. Don't assume just because price is at support or price is at resistance that you will get a bounce. You won't. Let a trend establish itself. Wait for this level to be cleared. Wait for this level to be cleared. So I'm waiting for this support level to be cleared. I'm waiting for this support level to be cleared. Once these levels are cleared, I will then look to trade this all the way down to the figure 1. So I'm waiting for price to move around 500 pips to the downside. By waiting 500 pips, I can then target 3,500 pips. That's my logic. Wait 500 pips to target 3,500 pips. For a lot of traders, waiting 500 pips sounds like a lot because 100 pips is a lot for a lot of traders. A 3,500 pip move I can leverage to over 10,000 pips through compounding. Okay, so focus on catching the bigger moves and applying patience rather than trying to always go against the trend. Don't try and predict tops and bottoms. It doesn't work. Okay, here on the weekly, we're trading below the 200 and the 50. So that's looking good on the weekly. On the daily, also below the 200, below the 50. So we have alignment. Everything is looking good. But remember, where are the levels of support and resistance? Just because we have alignment on the weekly and the daily doesn't mean that it's tradable. Price comes first. Look at support and resistance for leading indicators. Look at the moving averages to confirm as lagging indicators. Okay, look at the pound Aussie dollar. Pound Aussie dollar is starting to look very, very interesting. We are seeing momentum to the downside. Look at that. Since 2.2, round number. Yeah, 2.2, price found a level of resistance. And you can see that since then, we're seeing very good momentum to the downside. Price is trading below the figure 2. Price is now trading below 1.90. This is starting to look very good. Okay. On the weekly, trading below the 50 but above the 200. So that is not favorable. Above the 50, below the 50, above the 200. In addition, there's a lot of support levels ahead. There's pivot support there. There's pivot support there. Pivot support there. So there's quite a few levels of pivot support. So looking to trade this based on what price is currently doing, just be a bit aware of where those support levels are. Ideally, you want to see price clear 1.8, clear the weekly 200, and clear this support level. Okay, once it clears these levels, then we can look for shorting opportunities. At the earliest, certainly 1.8 and the weekly 200. On the daily, below the daily 200 and below the 50. So, it is looking interesting. If you're looking to trade this, just make sure that you have your entries and your stops all well placed and keep your risk small. Okay, that's the pound Aussie dollar. Let's look at the pound yen. Okay, pound yen. Start with the monthly time frame. If I just open this up, good weakness to the downside. You can see again, look, 200 acting as resistance, pretty much. Weakness to the downside. It's now trading just above 160, but remember, round numbers act as zonal areas. They aren't hard levels. So price broke 160, it's come back to retest that level. Doesn't mean now because it's above 160, doesn't mean that we're going to see strength. This is a zonal area. We need to apply patience here. Let's see what price has to do. And also we need to see price close. It's too early to predict a reversal. Price is trading below the weekly 200 and the 50. Yeah, and you can see that price broke through 50, came back to retest, break through 200, came back to retest it, and we're now seeing a bounce to the downside. Daily chart. Look at the move since this level here, which is going to November 2015. We've had a pretty neat linear trend to the downside, then a pretty steep pullback. Another leg down, another steep pullback. So pullbacks, these kind of deep pullbacks, these are a common feature at the moment of the pound Japanese yen. So going forward, if you look to trade it, you've got to have stops that incorporate those kind of pullbacks. You want to be trading with wide stops. Again, the reason why people trade with tight stops is because they're focusing on the profit. Get in, get out, or tighter stop means you can risk more, make more money quicker. But look at the ATR of a currency. If the ATR of a particular currency is, let's say, 250 pips a day, because the pound Japanese yen is quite, it's quite volatile. So let's say the pound Japanese yen covers 250 odd pips a day. If that's the case, then you need to have stops that incorporate that, right? And so having stops of say 50 pips or 100 pips, you carry a very good chance of being stopped out. If you're tighter than that, 10 pips, 20 pips, and that is pretty suicidal. So you want to be really careful with how you manage your stops and place your stops. Okay. So in terms of the pound Japanese yen, I have short positions running. When price breaks and closes below this pivot support, this is when I'm looking to enter. Now, I wouldn't consider this a good pullback. The reason why I wouldn't consider this a pullback is because it broke above 160. If price pulled back to 160 indecision, then weakness, that would be a possible pullback. But when it cleared 160, this negated it being a pullback entry. So again, don't get focused on pullbacks. Get focused on breakouts, because breakouts confirm the trend. Breakouts are far more, what's the word I'm looking for? Versatile, that's the word. Breakouts are far more versatile because they can be used in any market conditions. Pullbacks can only be used in specific conditions. And to understand how to trade pullbacks, you really need to have a very good understanding of price action. Okay. All right, guys, that is everything for today in terms of the currencies that I want to analyze. Are there any questions before I call time on the webinar, please? No questions coming through. Okay. All right, guys. Well, if there are no questions coming through, I am going to direct you all to a few websites. So bear with me a second. Okay, so right, as I've already directed you guys to the apprentice training. So if you guys want to know more about the dynamic trader community, if you want live training, if you want access to some of our proprietary software, if you want to be part of a community of full-time trend traders, if you want weekly webinars, if you just basically want a much more in-depth understanding of trend trading, then please check out this page. It's £99 for a whole month of training. Okay. Beyond that, please follow us on Facebook. So we have a Facebook page. So please go to facebook.com, The Dynamic Trader. I'm just going to put these links in the chat box for you guys. Control V. Okay, I can see some questions coming. Jake, you're very welcome. Fantastic. I'm really glad you said that. Jake's put a comment. I don't know if you guys can. Yeah, you probably can all see this. Jake said, no thanks, easy to understand. That's exactly what trading should be. Trading is simple. Actually, Jake, the correct terminology you should be using is that it's simple to understand. Okay, trading is simple but not easy. Okay, trading is simple but not easy. That is the way you want to look at it. So it's really it's very simple to understand good technical analysis. But remember, technical analysis doesn't make you a trader. Just being able to draw your support and resistance, just being able to recognize dojis and double tops and moving averages doesn't make you a trader. What makes you a trader is then being able to understand how to enter, how to build a portfolio, how to manage your exit, how to place your stops, how to compound, how to exit from your trades, what kind of trailing stop losses to use. Is the money in foreign exchange, is in its stocks, is in commodities? That's what separates a trader from technical analysis. Okay, so I'm glad that it's really simple, that you understood what I had to say. But remember, there's a whole other art to it as well. What do you use as your entry signals? My software produces entry signals, FX Praise. So the software will produce signals where I can enter based on breakouts and pullbacks based on algorithms that have been programmed into the software. Yeah, you're very... yeah, exactly, Jake. So what was I talking about? Yeah, entry signals. The software does everything for me. So the software will produce signals. The software has an inbuilt scanner, so it scans the stock market and the foreign exchange market for me. So literally, it'll just run through a whole scan. Zzz, boom, give me the best 2 or 3 currencies worth trading. So the software is doing all the work for me. However, and this is a really important point, the software doesn't trade for me. The actual final execution of the trade, putting in the broker account, putting my entries and my stops, especially the exit management, that is all done by myself. That is all done using discretion and done manually. You do not want to be using software that trades for you. There's a lot of flaws that comes with it. Okay, let's go on. Please follow me on Twitter, guys. Really, really important, at Zaheer Anwari. Anwari. Please follow me on Twitter. The reason why I say to follow me on Twitter and also the Dynamic Trader, which is Dynamic Trader, please follow us on Twitter. I'm just going to put this in the chat box as well. So there's me and there is the Dynamic Trader. The reason why I say to follow us is because I'm doing live periscopes on a daily basis, and I'm doing live Facebook live streaming. I don't know if you guys are aware of this, but Facebook have now rolled out Facebook Live, and that allows me to stream. So if you go to the Dynamic Trader page and if you scroll down, you'll see some live streams that I've already done, and I talk about trading. So here, how to use the larger time frames, the one that I did before that, how to build a watch list. So you know, I'm giving out useful information on these scopes, okay, and on these live streaming. So please like these pages. It's all free information, guys. At this point, what you guys want to do is really gather as much information so that you are aware that there's more to trading than just shorter term trading. There's more to trading than just getting MetaTrader or some kind of free broker software and trading. There's more to it. It's an art. It's a business. You're not going to see the consistency using, you know, just free information all the time. Okay, and finally, what was I going to say? Finally, yep, Periscope. That was it. The final thing that I wanted to share with you guys is, if you have not read the Almost Complete Guide to Trading, this is a PDF written by Anne Chapman, then please email me or please contact me through my through the social media platforms that I've just given you, and you can see all the topics that are covered. Now, on the internet, there's a lot of information. Some of it is good, but a lot of it is very, very, very misleading. This PDF will cut through all of that and give you a very clear indication of what trading is about. And it's all broken down into simple, clean, and easy to understand chapters. And there's a lot of information here, guys. I think there's, I don't know how many pages there are in here. Let's have a quick look. If I go down to the bottom, there's, yeah, 60 odd pages in this PDF, and this is a free ebook that we're giving out. Okay, so if you want this email, if you want this PDF, then you will have to email me on my email, which is at Zaheer, which is Zaheer@tdtpro.com. Zaheer@tdtpro.com. Okay, Zaheer@tdtpro.com. So please email me, and I will get this PDF across to you. Okay, guys, thank you all very much for your time this afternoon, wherever you are. It's 4:45 here in the UK. I'm also doing a midweek market analysis, my own midweek market analysis. I should really get this over to you. In this midweek market analysis, I do stocks as well. So, you know, you do want to check this out. So if you want to register for the next midweek market analysis, which is in an hour and 15 minutes time, so it's 6 p.m. to 7 p.m. UK time every Wednesday. Okay, so please register to that and come on to the next midweek market analysis. Okay, brilliant. Thank you, guys. Thank you, administrator. Have a lovely morning, afternoon, evening, and see you all on either one of my periscopes or on next week's FX Street. Take care, guys. See you later. Bye-bye.